Good evening, everyone. Welcome to Crypto Pulse Weekly, your weekly digest of the happenings in the world of crypto and analysis of the markets and Bitcoin and other currencies. So welcome again to this week's episode. Today we'll be talking on Crypto Drip about security. Before that time, as usual, we'll go through the various aspects of our weekly broadcast. So let's get started. So as usual, we'll go through the market updates. We'll talk about the crypto vital signs, which are analysis of the technical and the fundamentals of the market. And then we'll talk about the crypto drip and take questions and answers. As usual, I've tried to streamline the amount of news carried today so that we'll have time for any upcoming discussion and to be able to follow through on the knowledge sharing session. So let's get going. For the part one, in terms of market updates, we will observe that we had another all-time high made by Bitcoin this week. Same thing with Ethereum. I mean, it's quite a number of other cryptocurrencies, to be honest. And it seems like we've been able to flip the 60,000 resistance to support, meaning it's been a psychological barrier to trading for a very long time. I mean, this is the longest time in the last 3 months that Bitcoin has stayed within the same range. It's basically ranged for almost 40 days. And like I said last week, that when you have a market trading within a very narrow price range for that period of time, you are going to imminently get a breakout, either to the upside or to the downside. Well, we've seen a breakout to the upside. It's falling short of 65K, and it's dropped back. I think today it's dropped back to, as you see on the charts later, it's dropped back to about 60K, which is understandable because for a long time, people are selling off at 60K. So now 60K has become the buying level. And a lot of on-chain analysis already suggests that institutions have now placed their entries at 60K as opposed to 50 or 55 in the previous weeks. So yeah, we expect that the markets will either keep going sideways or will advance to 70K by the end of the month. If we keep going sideways, it means that we can make a slingshot for 70K sometimes by the end of the month. If we get to 70K before the end of the month, then we can expect some correction back. But I think that the leg up for this particular rally might take us as far as 100K and above. But having said that, it's a bit neutral right now, because if you bought before 60K, I mean, you're in good state. Everyone that has bought Bitcoin for the last 12 years, up until yesterday, have been in profits, because everybody that bought Bitcoin before yesterday have been in profits. So if you buy now, then you are buying at a lot of people's profit level. Not to say you can't buy, but I mean, you should have bought earlier in the day. That's what I'm trying to say. And the reason I'm saying that is because the price actually dipped back to 60K sometimes during the day. As I will show you John with the chart as well. We did have the price drop back to 60K, but it's back up now to 61,000 plus. So we expect that the sentiment is retained. We're bullish above 60K. I don't think we're going to successfully dip below 60K because we've consolidated so much below 60K that it's become a very solid demand level right now. In terms of regulation, I came across this story that the government of Turkey is trying to toe the line of the CBN of Nigeria, banning cryptocurrencies for payments. I think it's quite primitive, and when you see people issue this kind of decrees, it sort of tells where their mind is at in terms of evolution, financial or technological evolution. Because when you're saying you want to ban something as a means of payment, and it's already the most valuable asset or one of the most valuable assets on the surface of the earth, it's ludicrous. In the last week, I didn't carry down. In the last week, the market cap of Bitcoin surpassed the market cap of Apple, which is supposed to be the most valuable company in the world. So right now, the market cap of, the market cap of the cryptocurrency world surpasses the cryptocurrency, the market cap of every other asset class and that of the most valuable companies in the world. Same thing goes for biggest banks. Bitcoin alone now is more capitalized than all the biggest banks in America. So when a country comes up with this kind of regulation, it sort of tells me that, yeah, they're still stuck in the 19th century and they don't really understand what is going on. Because if they did, they will be finding ways to position themselves and make sure that they're at the forefront of things. And it's the same thing that's happening to India. And I'm quite surprised because India is such a powerful technological powerhouse in terms of development that they could easily take the world for ransom if they position themselves properly in this technological evolution. But we'll see how it advances as time goes on. But that's that with Turkey. But I just felt it was quite dumb, just like the Nigerian one was dumb. Moving on, the biggest news of the week, I would say, was the Coinbase listing on NASDAQ. Needless to say, it was a huge success. They had planned to hit 100 billion. They did hit 100 billion before the day closed. It closed back at 85 billion. That's probably one of the largest, probably like the 8th or the 7th largest listing ever. As at that Wednesday, when the market closed, it meant that the shares of Coinbase was more capitalized than the biggest exchange in the world, which is Chicago Mercantile Exchange. If that does not tell you anything, then I don't know what else to say. A company listing for the first time, not even through IPO, direct listing on NASDAQ, and is more capitalized than Chicago Mercantile Exchange that has been around for more than 35 years and is the most capitalized exchange in the world. Keep an eye on what Coinbase for the share and stock market experts in the audience or people who are usually investors in the stock market. I think Coinbase is a good play. What I think Coinbase will proceed to do now that they have this huge stash of cash, I think they'll proceed to acquire a lot of known cryptocurrency operations. So cryptocurrency and Bitcoin mining infrastructure, other smaller exchanges. I think they're going to start doing what we saw Binance do over the last 2 years, which is any upcoming cryptocurrency startups. I think they're going to go on acquisition spree. That's my impression because they're going to be so awash with cash when the price as the price of Bitcoin goes higher, institutional interest goes higher, and nothing provides institutional interest with such exposure like what you have here. So you have, 30% gain on the day of open, on the day of listing, and then market valuation 10 billion more than CME. That's huge. That's very huge. And in fact, one of their known major investors, people who bought on that day, were ARK Investments. I'll talk about ARK Investments later. They bought on the day of the listing. 2 days later, they bought about 250 million. Then 2 days later, they bought another 110 million. So I think this stock is going to perform wonderfully. It was trading about $328 at the close of day on Wednesday. Immediate short-term analysis seems to look like it's going to hit 600. 600 is less than 100%. A lot of people have criticized that projection. What do you mean? It's too early. This company is just listing and everything. But you need to understand what's at play here. We're at the cusp of a major technological boom that directly impacts the world of finance. And like I usually say, it's like being at the beginning of the dot-com bubble. and investing in the right companies at that time, like Amazon, Microsoft, Google, and then looking back 20 years, 21 years after, anybody who invests in any of those companies will have, will have either cashed out already or will have become a billionaire now. Somebody is asking how to buy. There are all sorts of stock trading apps. I know there's Trading 212, there's Robinhood. I don't trade stocks, but I know those two. Robinhood because of their escapade with GME stocks, and Trading 212 because of my pals who trade stock in the UK. If anybody knows other trading apps, you can put your comments on Zoom. You can put your comments there. But those are the ones that I know. I'm not an expert in trading stocks, but I can tell you those are the ones I know. What I think is going to happen is, on the back of this, I think Binance is going to create a ticker, a stock tracker coin, like they did for Tesla. That one I'm going to buy. I missed that on the Tesla one because I don't know what I was doing that day. I wasn't paying attention. But that one I'm going to buy because it's like fractional tokenization of stocks. So what Binance did was, for each share that they have, you can buy a fraction of it. So as the price of the real stock is going up, the price of that token is going up. I think it's a fantastic idea, by the way, but I think that's going to happen very soon. The ticker for Coinbase, I think, is Coin. And I think what's going to happen is they're going to create a similar ticker to track the price and trade the tokenized fraction of it. But all in all, I think it was a very huge success story, very massive announcements. Okay, plus 500. Somebody said plus 500. I don't know about those apps. So very fantastic entry. It's a good projection in terms of how they position themselves. I don't like them. I don't like Coinbase because I don't like their customer service and what they've done in terms of the price. So their Bitcoin prices are one of the highest on the markets. So I don't usually, I stopped using Coinbase, but they've conducted themselves, pretty smartly to sort of dodge any of the bullets that you usually get from regulators, and they've managed to pull this off. I was having a chat with myself. Well, I was thinking in my head that these guys have cash. They're just going to cash out, like they madly cash out, because what will now happen is anybody that's seeking to get exposure into cryptocurrency will just come and buy Coinbase shares, just like people have been piling on MicroStrategy shares. MicroStrategy shares is I can't remember. I think it's done like times 10 or times 15 since March last year. So like MicroStrategy shares and like many of those other companies that are into Bitcoin mining and all that, Coinbase is likely going to perform like that. And because they are an exchange within the United States, they already have that market. So people in the United States are sort of restricted in terms of what they can do in the crypto world because of they are draconian laws, to be honest. If it wasn't US that was doing it, it would be termed as anti-democratic, or some of those laws. But really, because of the construct of the country, many of those other exchanges outside the US cannot operate as well as Coinbase. So what I think Coinbase is going to do, once, because they've gotten this now, they'll start looking to get exposure in crypto banking. Like I know Kraken has gotten a banking license in Wyoming. I think they will try to do that as well. Things that will increase their foothold in the crypto world. So I think it's a good stock to hold for a long term or medium term, depending on your stock trading horizon. So much news about Coinbase. Good on them. I think we'll begin to see the fallout or the crypto aspects in the months to come, like we saw for Tesla. In terms of the sharp drop that we had today, two things: that Turkish legislation, then there was this news about flooding in northern China that trapped some miners. Those were coal miners, really, that traps coal miners underground and then caused a lot of power outages. And because China, before 2019, China had 75% of the mining power of Bitcoin. I think it's changing now because there are tons and tons of companies in the US, Canada, and even in the UK that are setting up huge mining infrastructure. So because of that, the hash rate, which is the rate at which transactions are processing, dropped. I think it's 20%. I think that was a typo. I think it's 20%, not 22%. It dropped 20% after there was flooding and explosion in northern China, where most of their rigs are. That's the logical, or that's the news explanation of the drop. But it was expected because we just broke through an all-time high in the middle of the week. So usually, if you break through an all-time high, and it's not the middle of the week, let's say it's like weekend or like during a public holiday, the price can keep going and can do like maybe 20 or 30% higher than that before resting. But it's during the week and you have a lot of huge institutions that are shorting the market. So usually the price will easily cool off. And that's what's happened. So we've cooled off from the breakout from 60K, and that's what we're seeing right now in the temporary pullback. I was going to talk about ARK Investment. So ARK Investment is a big investment company in the United States. They were the ones that initially bought 246 million worth of Coinbase shares, and they've doubled down to add another 110 via their combined ETFs. So we don't have ETFs for Bitcoin yet, but people are beginning to create ETFs on the back of some cryptocurrency play shares. So this company is creating ETF on the back of Coinbase, and they're also creating it on the back of, I think, two other shares that are related to cryptocurrency companies. And I mean, they bought this much in the first week. So I think as the price of Bitcoin keeps going higher, and I'll explain why that's happening, as it keeps going higher, the institutions will get more and more interested, and the institutions have very big pockets. So they're not like retail investors that bought in 2017. These are people that are looking to keep for 5 to 10 years or more. So, and they have infinite pockets in terms of cash reserves. So we'll see a lot of inputs coming in. There was another news, I couldn't quite confirm that news, but I think there was a news that Walmart was trying to load some of their balance sheet. I think 1% of their balance sheet. They're planning to put 1% of their balance sheet on Bitcoin. I saw that news, I think on Monday or Tuesday, but I didn't get around to confirming it. But it's inevitable because of people like this. Many people don't know the Rothschild group, but the Rothschild family have been projected to own the world, quote unquote. Oh, well, there's always this conspiracy theory going around about them being, the largest holders in most of the financial markets in the world. And Rothschild Investment Group is a huge player among the Rothschild group of company. And their recent filing shows that they bought 265,000 Grayscale Ethereum trusts. Now, they already had Bitcoin Trust since last year, which was valued at 1.92 million as at the end of last month. But now they've added 265,000 Ethereum to it, which is valued at $4.7 million. I'll tell you what these guys are doing, and I think I've explained it before. They call it, I can't remember the name now. It's a way of sort of reducing your overall risk across your portfolio. So let's say you wanted to invest in 100, let's say you wanted to invest in 100 things, or you have 200 or 50 things to invest. So instead of investing in those 50, say, you know what, I'm going to invest in 100, and then I'm going to put equal amounts of 1%. Then if it works out fine, then I'll get my money back. If it doesn't work out fine, some of them will do well, some of them will not do well. Then They will even themselves out. That's how most institutional investors play the game. And I mean, it's not only in stocks or crypto. They do that across asset classes. So bonds, government treasury bills. They do it for everything. So what they are doing is many of them are beginning to say, okay, let's allocate 1% and see what it does. The ones that allocated 1% before them, most of them have recouped their 1% because Bitcoin had done 100%. And so they've had to level up that investment or that profit into other things. But most of them are beginning to allocate, especially these very big ones, they're beginning to allocate, let's say 1% or 0.1% as a pilot to test the waters on the Bitcoin investments. So these and many more are part of the reason why the price of Bitcoin is going to keep going up. Because what is happening is there is a generational transfer between gold and Bitcoin. I mean, that's what I can say. In simple terms, that's what is happening. Gold has been used for 1,000 years plus or thousands of years as a storage of value and as a speculative investment that is always expected to go up. But in this case, Bitcoin is more functional, it's faster, it's easier to transmit, and it comes with less hassles. And unfortunately, the big institutional investors do not have the majority of it yet. So because of that, whatever the price is, they're going to keep buying. I think to confirm that I saw this news from BlackRock, the CEO of BlackRock. Okay, let me put it in context. BlackRock is the biggest investment company in the world. Their asset under management is $8.6 trillion. Trillion, not billion, trillion. Trillion is 1,000 billion. 8.6 trillion. That's their base. So when you have this guy saying that we think crypto should be looked at like an investment and not a substitute for money, you know that there is something that is changing in the atmosphere. And why am I saying that? I'm saying that because of the next slide I'm going to show you. And I'm going to pause for a while just to allow people to read it. Or I'm going to read some of it so you understand how far we've come. So this is just a snapshot between 2017 and 2021. So let's start with Visa. In 2017, Visa said we won't process transactions in Bitcoin because it's not a payment system. 2021, Visa is working to enable Bitcoin purchases. 2017, Deutsche Bank says Bitcoin is too volatile to be a reliable store of value. 2021, Bitcoin is now too important to ignore. ING, Vanguard, why Bitcoin is destined to become a niche asset. Now, 2017, they were just like, a cryptocurrency reality check. They were sitting on the fence. Now, exclusive, ING working on digital asset custody technology. Sources say. Vanguard sees idiosyncratic risk in cryptocurrencies wild rise, 2017. 2020, Fidelity Vanguard short funds have been loading up on crypto mining stocks. 2017, Howard Marks trashes Bitcoin, an unfounded fad. 2021, I've learned how much I don't know about Bitcoin. I mean, and it goes on, see BlackRock on the right-hand side, saying BlackRock calls Bitcoin an index of money laundering. The same guy now are the ones that bought Bitcoin futures since January, are the ones that are saying we should look at Bitcoin as an investment and not a replacement for money. So when I tell you that, don't listen to what these guys are saying. Look at what they're doing or find out what they're doing. I mean, the same thing with Morgan Stanley that said, Bitcoin's real value could be zero. They are the same guys now that say they want to offer their wealthy clients access to Bitcoin. They are the same guy in JP Morgan that said Bitcoin is a fraud and will blow up. Now they're saying investors could make Bitcoin 1% of their portfolio. And as a matter of fact, when they said that Bitcoin is a fraud in 2017, that same weekend, their traders in London were loading up on Bitcoins. Same thing with Goldman Sachs. 5 reasons why Bitcoin is not an asset class, nor a suitable investment. Goldman Sachs research cryptocurrency desk can make Bitcoin boom. PayPal, Bitcoin is as useless as payment a payment mechanism and ridiculous as a store of value. Now, PayPal is the grandmaster of payment system with Bitcoin. So really and truly, when institutions are late, they do everything to bring back the bus. And I keep saying that, when the poor man is late for the bus, he's late for the bus. If he can't run to catch the bus has left him at the bus stop. But when the rich man is late for the bus, they bring the bus back. I mean, regardless of whether it's a bus or a plane in this case. Or well, plane is more, yeah, in Nigeria actually. I think plane is more explainable. I mean, if a big man is going and you're unlucky to be on that same flight, your flight is automatically delayed for logistic reasons until the big man comes back. So what's happening here is the guys are beginning to figure out that, hey, we can make money off this stuff, big money. That it's that we found out to get ourselves involved. So for the last 3 years, half of the last 4 years, actually, they've tried to drag down Bitcoin and call it all sorts of names, just so that they can bring it down to their level. Because the rate at which Bitcoin was going as of December 2017, if that Bitcoin futures wasn't launched by CME and they started shorting Bitcoin, the thing will have probably stayed at above 100K, even entering into 2020. So they brought the bus back, they've loaded up. But what happened is, as they're coming to that awareness, so is many other parties. So governments are coming to that awareness. In another news, I saw Miami County saying that they can be taking payments in Bitcoin. There are so many things going up in the air about people coming to the realization that, we can actually use this as a payment option, or we can use this as a storage of value, or we can use this as, substantive investment vehicle. So when these guys are beginning to say that, we think, this should be used as a separate asset class, it's coming to a time where, I mean, right now, the common man cannot buy one Bitcoin because one Bitcoin is $64,000, $63,000. Like I was making a joke. I said it will come to a time when the common man will not be able to buy Bitcoin. And then somebody said the common man can't buy Bitcoin already. But I said, yeah. But what I meant to say was that people can still put money together and buy Bitcoin now. I mean, in another 5 years, you'll probably be selling at millions, but probably like 10 million or more. And because if you look at the available supply, you look at the market capitalization of gold, you need to look at the global equities market. It's easy to see how the distillation can happen. So I just told you about BlackRock. BlackRock is 8.6 trillion asset under management. If 8.1% of 8.6 trillion, hold on a second, my math is not good and it's hanging. Those zeros are too much. Okay, let's start from 10%. 10% of 8.6 trillion is 860 billion. Okay. Yeah, so 10% of that would be 86 billion. So that's 1% of their assets under management, 86 billion, 1%, one company. And you have many like that. You have family inheritance or family trusts, family investment vehicles that are traditionally invested in, corporate treasuries or bonds or government bonds. And now like, okay, what can we do? How can we, get exposure to this Bitcoin to reduce our exposure to inflation? In fact, I remember saying in, I think it was September or August last year, that because of the ownership of MicroStrategy shares, the pension funds, or what's it called? No, not the pension fund, the sovereign wealth fund of the Netherlands actually has exposure to Bitcoin. So you're going to have people like that. You're going to have Bitcoin plays like that. I think it was February that the ETF in Canada launched. Three ETFs have been filed in Canada since that time for Bitcoin, and many more for other cryptocurrencies. So this is the real cross section of what's happening. And like I told somebody, like, these guys are not stupid. This is their game. Like, this is what they do. So if they're suddenly changing their mind, they're beginning to see what some people have been saying before, that, okay, this thing is much more than we thought it is. And like I told somebody, I think it was a friend, saying that he has his saving in stocks. I said, well, I think you should have your savings in Bitcoin. That, not a financial advice, but if you compare your stock value in 10 years time to what Bitcoin is going to be in 10 years time, you are better off, because you have limited supply, and you're not subject to the volatility. On the long term, Bitcoin is going to become a 10 trillion market cap asset. Then you won't have the kind of volatility we have today, where you go 20% up and 30% down. To give you a good example of what I'm saying, in the last bull run, when you have, let's say, like a 100% rally, you usually will get like a 40 to 50% correction. Since the beginning of, what am I saying? Since the beginning of not August, September, we've not successfully had a 40% drop. I can show you the charts when we get there. We've not successfully had a 40% drop in the market. We've had 25, we have 35, we have 30, we have 20. We've not successfully dipped below 40%. So that tells you that the market is getting bulkier in terms of capitalization. And because of that, the volatility is going to release. Everybody's like, yeah, I have concerns about volatility. I say, yeah, volatility is par for the course. The asset class is really still small compared to most other asset class. So naturally, you see volatility. And because it's also rapidly taking in funds. So it's expected that you have that kind of volatility. To buttress my point, there was this milestone alert that I saw today, was talking about the number of coins that now have the market cap above 1 billion. So we have over 100 cryptocurrencies sitting above 1 billion market cap right now. So that's even outside Bitcoin. So we're not even talking Bitcoin now. We're talking other cryptocurrencies. And that excludes cryptocurrencies like Ethereum, because Ethereum is in the 100, this is over 100 billion. So he excludes Ethereum, he excludes, okay, well, we can take people like Polkadot, Cardano, and BNB, because those ones are in the 20s already. But it shows how much this sector is growing just in the last 2 years. To already have 100 coins over 1 billion in market cap. Anyways, going on to Ethereum's all-time high, I covered this about 2 weeks ago to say that there was an expected fork, and that there was an initial confusion around April 1st on Ethereum, and that if nothing happens on April 1st, the price will recover. The price did recover, but it didn't really hit a big all-time high until, I think, today. So it first did like 2,100, then today it went to 2,005, almost to 2,550. There was an Ethereum fork. Okay, for the benefits of people who are new, a fork is usually like an upgrade of a cryptocurrency blockchain network. It's like a version upgrade on your app. Let me use that word. But in this case, because the technology is what you call distributed computing, meaning that all the information of the application is sitting on all the computers that are participating in the Ethereum blockchain. All of them will need to be updated to be able to function normally on the new improved version of that blockchain. So they've done this Berlin fork now to help Ethereum prices become cheaper. I know there was a lot of people complaining yesterday about exchange, having issues with the exchanges, not able to withdrawing and the money going lost or stuff like that. But I think people, they didn't make a lot of announcement about it, that people should not try to move their Ethereum around yesterday. But it's completed now. I think most of the exchanges are now trying to upgrade their own applications to reflect the changes on the network. So that happened yesterday, and that's probably responsible for why Ethereum hit another all-time high. There are many speculations that Ethereum is going to become $1 trillion market cap. I don't know whether that's possible this year, but I know one thing for sure, that Ethereum will likely do anywhere between, very easily between 5,000 and 10,000 before this year runs out, most likely at the current rate, because except there are significant challenges within the Ethereum blockchain, and then the competitors rise to the task, like I explained yesterday, explained last week, competitors like Binance Coin and competitors like Binance Coin and what's their name? Cardano. Binance Coin, Cardano, and Polkadot. Those are the guys. Sorry, somebody blocked my train of thought, was calling me. So Binance Coin, Cardano, and Polkadot, except Ethereum has a significant problem and those ones follow through with their plan, then Ethereum might not get to 10K. But otherwise, they're well positioned to get 10K, because what this Berlin fork and upgrade is also going to do is give people the opportunity to do what you call staking on the blockchain. So staking is like it's like a fixed deposit arrangement. It's like an investment vehicle on that you can do within cryptocurrencies. There are various levels to that. I'm not going to talk about that today. You can do them at an exchange level. You can do them direct on chain. You can do them through decentralized finance. I have a course that talks about decentralized finance. Or you can do them through staking from your own external wallets. But as I said, it's outside the scope of our discussion today. In terms of Cardano actually starts it starts for like 5 weeks, just dangling and dangling and dangling around the same price until it started moving over the weekend. It's now succeeded in hitting a new all-time high as well. And because the smart contracts functionality is live, I think we might start to see some fireworks from Cardano. So I don't know if I explained no, it wasn't last week. So I was talking with somebody on the phone and I explained what some sectors in cryptocurrencies are for. So the way I broke it down was like, we have primary technology coins like Bitcoin and all the wannabes that looks like Bitcoin. Cardano's move, to your question, Lukman, Cardano's move is not just because of Bitcoin's move. Cardano started moving. Cardano started recovering from that trading in range before Bitcoin. There was something that happened, I can't remember. There was something that happened last weekend. There was a particular news that broke and Cardano started moving, then Bitcoin started moving. So they might have been, look like they were contributing to each other, but Cardano was due for a breakout anyway. But what I was trying to explain before that question came in was that we have sectors, just like you have industry sector when you're trading stocks, you're looking at renewables or electric vehicles, you're looking at pharmaceuticals or healthcare, you're looking at tech, you're looking at big tech. So you have sectors and subsectors as well within the cryptocurrency sphere. So as I usually say, that the primary sector or the primary coins like Bitcoin and the wannabes like Bitcoin, like Litecoin, Bitcoin Cash, Bitcoin SV, Monero, Stellar Lumen, all those guys are in the same category as Bitcoin, peer-to-peer cryptocurrencies. But beyond that, you now have what I call the smart contract platforms. Now, what the blockchain technology brought us by Bitcoin is the ability to be able to distribute computing across computers as opposed to dealing with a client and a server technology, meaning you're plugging into a server where you're getting all your information from. This computing technology is giving us the ability to get that same information from across multiple computers at the same time and update the data for that application at the same time across multiple computers. So platform ecosystem or platforms for smart contract ecosystems like Ethereum provide the opportunity to not only share data in peer-to-peer, but to build programs on the blockchain. And that is what has blown open, in my opinion, one of the primary things that blown open the cryptocurrency world and the blockchain technology. Because what it meant was that you could actually build programs that will not be running on a single server, but will be running on all the computer nodes that are connected to that particular blockchain that the program is running on. So that's why Ethereum is responsible for almost half of the coins in the market, because people are able to then create other tokens on the back of Ethereum. So there are Ethereum wannabes or competitors as well. And like I always say, top among the list is Binance Coin, Cardano, and Polkadot. I've explained this, I think I've explained this before, but just to say that out of those other coins, Binance is a bit separate because not only is it a platform, smart contract platform, it's also an exchange coin. So it doubles its utility and demand just by being able to function across three sectors of the market. And what I said, I think I said that I explained it last week, that people, if you're looking for long-term investment, you should consider Binance. As long as the guy is not dead, Binance is a good buy because they're also making a lot of purchases. They are probably more capitalized in real sense than Coinbase, even though they've managed to, steer their affairs away from the United States and keep themselves below the radar. I think they have more money, frankly speaking, way more money than Coinbase. And because their coin has more utility, they are in a better position to challenge Ethereum. And I mean, it's not just a better position, they're already launching projects. They're already launching new coins that are coming to the market and are blasting prices without making noise, quote unquote. So, like I said last week, that they're like made in China of Ethereum, but it's really effective. Like the original made in China as well. They might look inferior, but they were getting the job done until China perfected their game. And I think that's what's happening with Binance as well. So I think Binance, Cardano, and Polkadot are very strong coins to watch out for this year. And even on the long run, I think I'll be holding them on the long run because I think they have very extremely strong fundamentals over and above anyone that I might have told you before. So yeah, I think Cardano is struggling because they've not launched any projects. People are not seeing their project, even though the smart contract functionality is available on the network. They're not making noise. Let me use that word. Polkadot is making noise. Binance Chain is making noise, but they're not making noise. So that's probably why it's also been on the low. I just felt I needed to touch on this because people have been bombarding me with questions. Should I buy Dogecoin? Can I buy Dogecoin? When can I buy Dogecoin? Is it not a good idea? I've missed Dogecoin. So I like, okay, I need to talk about Dogecoin because people need to understand what they're getting themselves into. As it's where the world of cryptocurrencies and digital assets is complicated on its own. To now add more complications to it, you now have things like Dogecoin, like Lukman said, Pumpamental coin. Yeah. So Dogecoin is a meme coin. A meme. I mean, a meme is just something for fun. It's a coin that was created just for fun. That okay, if there's a coin, the original ideology was if there's a coin like Bitcoin that is deflationary, then let's create another coin that's just for fun, that's inflationary. So every 10 minutes, it's pumping out massive amounts of Dogecoin on the blockchain. But because somehow, Dogecoin got into the hands of, I'll call them the millennials, the TikTok generation guys, and they started making a lot of hype about it. And that hype sort of caught on, and people like, yeah, let's hold Dogecoin, let's buy more. Dogecoin to $1. Now imagine you have 5 million Dogecoin to $1, you're a millionaire. And decided doing TikToks around it and it went viral. And before you know it, it's caught on up to the fact that Elon Musk was tweeting about it. And then it just became, a viral sensation and people just got crazy about it. So now I'm looking at Dogecoin having the same market capitalization as VeChain. I mean, VeChain is one of the most industrious token in the cryptocurrency world. They've been around since 2017. It's a supply chain token. It has proper real world usage. Proper. It's one of the model blockchain example in the real world. So VeChain has proper real world usage, proper technology, proper fundamentals, and you have Dogecoin, doing better than VeChain. So what this tells me is that hype is better than reality, or hype is greater than reality. Um, Dogecoin does not have any function. It's just a betting asset. So, like I told everybody that asked me, and I'm saying it again now, if you want to buy Dogecoin, yeah, go ahead and buy Dogecoin, but don't buy with money you cannot afford to lose, because the people that are profiting from Dogecoin are the people that really have stashes of it. So, for me, I bought Dogecoin once before, but I saw it falling, and I said, "Oh, okay, it looks like it's still going to go back." So I bought it. I bought like one, I think maybe like £150, and it went up. It became maybe like £200, and I cashed out, and I just went back to the sidelines, because I don't have money that I can't afford to lose right now, personally. But if you have money that you can afford to lose and you don't mind, it's a good buy. Considering the fact that it's already heavily capitalized, I can't fathom for the life of me how Dogecoin is getting into billions of dollars in market cap. It does not make sense. But yeah, sometimes things don't make sense, and that's the that's the explanation of Dogecoin. But caveats, be at the risk of losing your assets, or your assets becoming completely worthless, especially when the price of Bitcoin crashes significantly. Shitcoins, as they call it, have the potential to lose up to 90% of their values. So, for definition, shitcoins are usually coins that just usually don't have any real world usage, but people create them. Yeah, people like fun. I understand that people like fun. So people create those coins just for the hype and try to milk unsuspecting investors. So anybody coming to the market, and the funny thing is, even the exchanges are now beginning to present Dogecoin on their opening pages. So in February, when Dogecoin was pumping, if you logged on to Binance, when you see Bitcoin and you see Binance coin, the next thing you see was Dogecoin. Despite the fact that everybody knows that it's just for fun, it doesn't mean anything. But because people were demanding it, they kept selling it. But just so you know, it has no value. It does nothing. So if you're holding it, as they say, OYO, you're holding it at your own risk. Uh, so I just felt that I needed to say that. There are quite a number of because there's another one, a new one now called Shiba Inu. I'm not even sure that one is on exchanges. I think that one is on DeFi platforms. That one is it's already done. It's already done, like, what am I saying? It's not more than 10x. Somebody said it did 7x in the last 1 week. So there are many of them like that, because this is what you call alt season. And I talked about alt season for the last 2 weeks. It's a season when other coins outside Bitcoin tend to outperform Bitcoin. By the end of May, all this will be over, and many of them will start losing their value against Bitcoin again. So if you don't cash out on time, you'll be holding the bags for a very, very long time. I can guarantee you that. Maybe forever, but I'm sure for a very, very long time, you'll be holding the bags. In terms of vital signs, like I said, we are currently at 2.2 trillion. Half is sitting in Bitcoin, half is sitting in altcoins, depending on who you're looking at. What's it called? CoinGecko will say we're at 49%. What's the name? CoinMarketCap will say we are 52% market dominance. I think we're at 50%, 50-50. And remember what I said, that when market dominance falls below 60% for Bitcoin, altcoins feeding started. And you can see that. So even at 50% right now, we've gained, this is last week's valuation, we gained 5 billion over last week, total market cap. And then out of that 5 billion, 23 billion more has moved into altcoins in the last 1 week. So it shows you that money is flowing into, it's like ebb and flow, as they say. The money flow between Bitcoin and altcoins, depending on what part of the cycle you're in. So right now, the money is flowing into altcoins. By May latest, if I think May, end of May latest, or early June, the money will flow back to Bitcoin, and then the altcoins will just stabilize. But what will happen is the altcoins then might look like their prices are not falling because the price of Bitcoin is going up. But when you check their exchange rates against Bitcoin, you notice that they're gradually losing value, and that continues to the end of the cycle. In terms of the charts, where are my charts? We've seen a correction we've seen a recovery from 60K, which is the drop we had since the beginning of today. So we're sitting at 61 now, intraday. If you look at the daily, you'll see that we're still pretty much in an upward trend, even though we are close to the upper end of the standard deviation. But I don't see this coming down significantly. And this particular daily candle that we're seeing for today, that's yet to close, is very indicative of the market sentiment. If you have a week like this, it means the whole 60,000 to 61,000 was completely bought up when the market dipped. And for context, we've had 1, 2, 3, 4, 5, 6. We're on the 7th month of back-to-back gains in Bitcoin. So my projection is that we're either going to go from 61 to maybe like 120 this month, or we'll go sideways this month, and then next month go sideways again before the market picks up. But at some point, I know that the market is going to break 120. I mean, break 100. When it break 100, then it's going to break 200 and 300 before it cools off again. You remember what happened last year when this started around 10,000 for a long time, the market couldn't break down, then the market couldn't break up either. Then we started climbing from 12K, then we stayed around 16 and 17K. Then all of a sudden, in December, we just broke out and started climbing. And before you could say Jack Robinson, Bitcoin had gone from 17 or 16K at the beginning of December to 40K at the beginning of January. I expect that kind of thing to play out very shortly as well. In terms of market sentiment, you can see we're tending to extreme greed now. Last week we were at greed. The week before that, we were pretty much the same. The week before that, we were close to neutral. Now we're at extreme greed. I usually say that when we start hitting on extreme greed, usually close to 90 or 95, the market is going to take some correction or cooling off. So we're not yet there yet. We can still go back and cool off, but we're not yet there yet. Historically speaking. In terms of technical analysis, the only difference between last week and this week was the intraday sentiment, which became neutral. Obviously, for obvious reasons, the market has taken a correction. The sellers have not been able to succeed in breaking down the price below 60K. So everybody is looking at themselves. Figuratively speaking, the sellers are waiting, the buyers are waiting, and everybody's like, okay, what's going on? Are we having more people joining? Well, what I think the market has come to an agreement that 60K is a good support. As I said, we might not see ourselves below 60K for any time soon. This is our psychology of market cycle. I always bring this up because it helps me to stay grounded and help me to communicate to people that they should stay grounded. We're not yet at euphoria. We're still here. We're still somewhere between belief and thrill. We were at thrill somewhere in mid-February and mid-March, but we're back down to at the end of belief now. Somebody was asking me that she was not sure whether her account was real because the account was showing about 50% gain, I think, over the last months. I said, well, it's not really significant that I think you see it's real when you see like a 400% or 300% gain. That's when you realize that, this is crazy. For somebody that's just been in the market for 2 months, I was having a discussion with another person who was reminding me today about a coin I told her to buy in September. I totally forgotten about it. In fact, I sold mine. She now said she didn't sell it, that she bought it with £50, but that she noticed that on Wednesday it was showing £1,100. And she was like, what? That she needs to sell this stuff. So I was like, oh, I didn't even remember that particular comment. That it's not much more than that. So this is that kind of that time of the market where prices really go crazy. And as much as possible, people should position themselves to know when to take profit. I think it's going to be not next week, probably first week in May, when I'll be having the portfolio management class on how to take profit and make sure that we cash out properly from the bull markets. So going on to talk about the crypto drill for today, which is securing your assets. I think it's important to talk about this now. I know some of the courses have covered it, And I think I've talked about it in times past as well. But it's more important now because, not because of this week or next week, but because in the weeks to come, when you start to notice some supernormal gains on your assets, it's important to know how to secure your assets and important to know how to keep yourself safe, quote and unquote, in the cryptoverse. And the reason being that once people start earning, a lot of cryptos, hackers get to work. They start, doing all sorts of invasion of people's assets. So it's important that, one, you know how to secure yourself and you know how to defend yourself. For people who drive, there's a principle called defensive driving, meaning that you drive in such a way that you don't put yourself at risk. If you drive on UK roads or in Nigerian roads where there are narrow roads and both of you are trying to navigate between a double parking scenario, you will notice that people who are experienced driver will first come out and invade your space as if they're going to ram into you before going back. The reason they do that is they're defending their space so that they're not going to be closed off to the car park on the side of the street. And then they're also making sure that when they do that and come back, you also will swerve in a way and make space for them. So you need to be able to defend yourself, quote and unquote, in the crypto world. That's why I gave that example. And one of the ways to defend yourself is to understand the various levels at which you can defend your assets. And that's what I've put on the screen. You can have on-chain, you can have layer one, and you can have what I call environmental variables. On-chain means securing your passphrase on the blockchain itself. I think next week I'll talk about the layering of the blockchain technology so that people understand where their money is really at and what is happening when they buy cryptocurrencies. So at this level, you have what you call hardware wallets. You have hardware wallets like Trezor, like Ledger, like SafePal. These are like physical devices that help you to capture the encryption of your wallet on the blockchain. What is really happening here is that it's not like you are moving the bytes of your money from the blockchain to your wallet. No, your money is on the blockchain. It never leaves the blockchain. But the access to the money is what you are securing by plugging in that device. So when you plug in that external device, it does its own multi-authentication by saying, put in a password, then it gives you a 24-word phrase that have to be in this exact order and have to be correct before you can access that device. Then when you access that device, then you create another password on the application that the device is running so that you can now connect to your wallet on the blockchain. Like they say, whoever has the keys has the money, or not your keys, not your money. This is where the money is, because anybody that has access to the information to get into that wallet has the money. So if your let's say Ledger or Trezor wallet was to get lost, if you have your passphrase and you are able to get it, you can retrieve the access to your wallet because you have the passphrase and you have all the necessary data to access that wallet on the blockchain. So this is usually for when you are keeping the assets on your wallet. So you have hardware wallets, you have mobile wallets, which is on phones. Example is Trust Wallet, Coinbase Wallet, Crypto.com DeFi Wallet, My Ethereum Wallet, MetaMask, SafePal, I've talked about SafePal, IM Token, quite a number of them, a large amount of them on the market, for which you need to provide personal password. So for this hardware wallet, you have like 3 levels of authentication. For the mobile wallet as well, you have the phone level authentication, which is like fingerprint or pattern or facial recognition. If it's Apple, then you have the app, the authentication by the app itself. So the app might request that you also use fingerprint or your face to authenticate to get into the app. then if you want to move money or you want to do a transaction, it will require you to authenticate as well. So you have that on the mobile wallet, then you can have it on web browser. The web browser is the most dangerous of it all. And like usually tell people, because if somebody gains access to your computer, then that web browser wallet can be compromised. Same thing with the phone, really. And same thing with this, the hardware wallet. If somebody gains access to the hardware wallet, nothing will happen if they don't know your passphrase and they don't know your password to the hardware wallet itself. But if somebody gain access to this, and I mean, it's like a hostage situation. I understand some robbers are ransacking people's phone, asking them to send Bitcoin to Nigeria. So you might want to keep your mobile wallets somewhere that, I mean, it's far away from you, quote unquote. If you're going to keep your crypto on your mobile wallet, then it shouldn't be the phone that you're using for other things. The same thing for web browser wallets. If you're using a web browser wallet, then make sure you have a VPN. I can send you to a link to a VPN now. If you use that link, you get some discounts. Make sure you have a VPN, and then make sure that you have antivirus and anti-phishing stuff that can pick malwares from getting into your system. Because if they get into your system and they take control of your system, then they can access this web wallet. The web wallet works pretty much like on the same principle, like the three of them, but it's the hottest of them because it's connected to the internet. Layer one. So layer one is really a custodial service. It's like the bank. So the exchanges are like our banks, our modern day banks with the electronic banking. Everything that we're doing on the exchange is not happening on chain. I'll take that again. Everything we're doing on the exchange is not happening on the blockchain. It's just happening on the database of the exchange. And that's why people, in the past bull run, a lot of people got to rug pulled, a lot of people got scammed because of exchanges that went down. And people really were skeptical about keeping their assets with exchanges. And that's where that saying came from, that not your keys, not your funds. But over time, exchanges have evolved, and we can see that from people like Coinbase that have now become publicly listed companies, meaning they are now properly regulated, properly structured organizations with insurance, actually, that makes them probably more secure than keeping your money in your mobile wallet. I'll give you two examples. In 2018 or 2019, Binance got hacked for $40 million. And within 1 week, if I immediately told all the account holders that whoever has been attacked or have their funds taken, that by the end of the week, the funds will be back there, that nobody should worry. And that's exactly what happened. But beyond that, not only were they that liquid to pay back all the accounts that were affected, they were able to blacklist all the Bitcoins that were stolen from their accounts. Same thing with KuCoin last November, I think, when they were hacked for about 180 million. They got more than 90% of the money back, and they caught the guys. So exchanges are becoming more solid as custodial services for crypto than what they were 4 years ago. So I have split sentiments. Like I tell people, I keep stuff on chain and I keep stuff on the exchanges, but I think I have more faith in the exchanges now, especially the very big and heavily capitalized ones like Coinbase, Kraken, Binance, Gemini, KuCoin. I mean, those are huge. Bittrex, those are hugely capitalized exchanges that have been around for a long time. And of course, most of them do have insurances, and people like Crypto.com that have operations in many countries as well. So because of that, because what you have on the exchange is not layer one, yes, you need to stick to exchanges. But in sticking to the exchanges, you need to now take care of the environmental variables. So the same way you're not going to expose your PIN number to a stranger, or expose your card details to a stranger, or expose your details of your internet banking to a stranger, you shouldn't do the same for your exchange account. There's a story of fraud that's going or that went around UK in the last 4 weeks. People in the UK will be familiar with it. Some people send you a text message like the Royal Mail that you have a mail that is short on payment, and then you need to pay them. Now, it usually happens when you buy something from outside the UK and the sending party did not factor in all the custom charges. So you are now short because by the time they charge custom duty for that particular goods, you now need to pay as opposed to the sender having to pay. It's happened to me before. I can't remember what I had to buy from US and they charged me maybe like £20 or something crazy. I was really angry then. I like, this money is so much for something I already paid for. So it happens normally, and you will get a text message from your Royal Mail saying you have so at so place, come and pick it. But this one came, so I actually got a copy of that text message. I went to the site that was presented on the phone. I was actually going to put in my details, but then I can't remember what happened. So I got distracted, and then I left my phone, and I totally forgot about it. I didn't go back to it because I'd actually ordered something like a bone conducting headphone or something like that on Instagram. So I was thinking that, okay, maybe it's that stuff that looks like it came from China, that maybe they're the ones that didn't pay. Only to discover that somebody now told me from church that, she got compromised, she got called, and then she put in her card details and everything on that particular portal. So when you look at the portal has Royal Mail on it, but instead of having Royal Mail, it has Royal hyphen in just like the GTP one that they were passing around. So it was a dummy URL to capture the details. So what they now do is after like a few hours, they will call you and tell you that you have been compromised. Of course, if you remember what happened earlier in the day, you know that, okay, that's probably where I got compromised. And then they will ask you to start reading out more information, ask you to move money from one account to the other. Basically, that's the final kill. So to protect yourself from such things as will happen in real life, you need to have what you call multi-factor authentication on your account. Multi-factor authentication comes in various forms. So you have authentication by SMS, authentication by email. Then you have authenticator apps that you can download on your phone. Good example is Google Authenticator and Authy, Authy. I use Google Authenticator, and Google Authenticator will link your account to that particular code on Google Authenticator, and I think every 60 seconds it generates another code. That helps you to secure your account on two levels. One, it means that nobody can access your account without you verifying by phone and by email and by text message. Now, it looks like an overkill, but I mean, if you have significant investments, there's nothing like an overkill in making sure that that investment is secure. So if you want to log into an account, if any of my accounts, for instance, I'll get an email, I'll get a text message, then it will require that you are putting a Google Authenticator code. And it does that for every transaction that moves value in and out of the account as well. What this does is that before you can successfully hack my accounts, you probably have me under hostage, because it means that my phone is providing you the authenticator code, it's providing you the email code, it's providing you the SMS code. And then on top of that, I even missed out one, whitelist management. Whitelist management, okay, yeah, somebody said 30 seconds. Whitelist management makes sure that only the addresses, the blockchain addresses, or the exchange addresses that you've added to your account for a particular coin can have money sent to them. They are like saved recipients. These are like saved recipients on your internet banking. If you don't have whitelist management, it means that if somebody gains access to the account, they can just move money out or move money anywhere they want to without any restriction. But if you have whitelist management, they will first have to go through the authentication of the multi-factor authentication to add that address. Then they will have to go through that authentication again to withdraw money. So that makes it very onerous for an invader to do that. The second two that I mentioned, the dedicated emails, meaning don't use general emails. If you can, use your separate emails for your crypto business if you can. If you can't, then make sure you have what you call anti-phishing code. Anti-phishing code means when an email comes from your exchange, it comes with a code that only you know, and you give them that code. If it doesn't have that code and the email comes from an exchange, then you know it's a hacker trying to bait you into clicking on the link so that they can take control of your account. So anti-phishing code is actually very efficient. I usually have it on almost all my exchanges that have it. I usually use it because it means they can't send you an email without that code. If they send you an email without that code, that email is not valid, and you can't take that email as from them because you are the one that provided that code. It's like a password from them or a passphrase that says it's truly them because you gave them that phrase. Of course, I don't need to go into password management. That's IT 101. You need to brief off your password. A simple technique. Most people on this call are bilingual. Bilingual meaning most of you can speak more than one language apart from English. So you should factor that into your password. Like I usually tell people, you should use everything you have to your advantage. You shouldn't have password that is your date of birth only or your names. No, you should have passwords that are ridiculously funny stuff. It might even be your native dialect, and I mean, it could be a sentence, it could be a phrase. That's how passwords are supposed to be, and they're supposed to have all the works. Because the more convoluted the password is, the more difficult it is for any of your devices or your accounts to be breached. I think that will be it for today. Thank you very much. I've really overshot my time by quite a while. If you do have any questions, please type it in the chats on Instagram or on Zoom, or you can unmute your mic. Okay, so Trello and Kusamas. Well, to answer your question, Chinelo, they are still to hold. Honestly, I don't think I want to sell my Kusama anytime soon. Number one, because it has very limited supply. So when the price really starts to go up, that kind of coin will see a lot of spike and a lot of gains. So personally, I'm looking for a 10x or 11x to take out my initial capital before considering what I will do with the rest. But I mean, if you need the funds, you can. Kusama has done well. I think it has done almost 100% since mid-February or thereabouts. Hello has not really moved, even though it's made some gains, but it's not even started, in my opinion. The same way someone was asking me about ontology today, and I said, how much profit have you made? He said, did you say 5% or 15%? I was like, for real? That's not profit now. I should wait for proper gains. And I was telling him he should try as much as possible to. Okay, so he was saying that, okay, but it's fundamental. So I copied the fundamentals of that particular fund. I think it was ontology. And I sent it to him that this coin has been around since 2017. It has not even done its all-time high of 2017. It has about 7x or 6x, 6 times to get to from current price to all-time high. And usually coins that have pumped before and are good coins, usually they will at least attempt their all-time high first in any altcoin cycle. So I said, I don't know why you're in a hurry. For new altcoins, I mentioned Flamingo Finance earlier in the day. Flamingo Finance is on Binance. KSM is cooling off. So don't worry. KSM is a solid asset. If you sell it, you might regret it. Let me just say it that way, because it's one of those assets that is seldom pulls back heavily. So when it pulls back heavily, it's because it's about to take a long shot. I've sold Kusama 3 times in the last 10 months. I've bought and sold 3 times, and each time I bought higher. So the first time I bought, I sold at a profit thinking I'd made significant gains. Then I saw it when going back, okay, I bought back again. Then I sold thinking I made gains, and I sold again, I bought back again. So if you don't need the money, don't sell. That's my counsel. Well, I think Kusama is just preparing to. Is that in fact, Kusama would at least do $5,000 before anything happens this year, guaranteed, guaranteed. So I mean, how much is Kusama right now? It's almost about a tenth of that. So yeah, if you want to sell, I mean, I know people like Ramat that sold at I don't know whether it was 80% or 100%. If you want to sell, you can, but then you can just see it going up after you've sold that you're wondering, oh my God, what I just do. Great Wheel of Wheels, do you have a question?
You have started again, Dr. David. Good evening.
Good evening.
Thanks for the much of your explanation today. I have actually benefited a lot, and I want to thank you. Yeah, really appreciate your explanation in respect of the Kusama, because I mean, it's been an interesting story at this end. So that is the much that I can say. And my advice to anybody that is on this call is, yeah, I know some of us might be in a hurry. When we say 5%, what happens in the banking industry, which is something around 1%, 1.2%, sometimes 0 point something percent. See 5% gain, we feel like, oh, wow, a whole 5%. So, but I mean, I will be very, very honest. I've had a coin that has done as much as 1,692%.